I would like to introduce insurance wellness coach, Rudiger Ellis.
I want to thank the management team and David Griffith for inviting me to speak at the Reunion Project in Philadelphia. And my topic is on insurance wellness. My name is Rudy Z. Ellis, and I am the insurance wellness coach. Now, before I get started with all the nitty-gritty of insurance, I just want to share very briefly my story. In 1978, my mother passed, and we found out that she did not have adequate insurance at that time. Of course, we were able to bury her. We did like most families do, pass the hat around, and that was taken care of. Later, I began to just research what was life insurance about and why we were in a situation where she did not have adequate life insurance. Well, it simply was the type of policy that she had, what was called an industrial policy. Minimal coverage, even though she had paid for years. In 1981, I became an insurance agent. And one of my objectives was to learn and more about insurance and to help share what I learned with others so that they would not be in the same boat. Now, one of the things that we need to understand about life insurance as it relates to insurance companies is that they are discriminatory. What they do is evaluate based on a number of factors. And depending on what those factors are, determines whether or not you will or will not be approved for an insurance policy. Well, smokers are penalized, yes, even though they know that it's not good for them. They're actually cutting 10 years off their life. The insurance companies do penalize them by making them pay more, but they do not receive the same treatment in the sense that a non-smoker with HIV would. They do not have to pay the sky-high premiums that a healthy non-smoker HIV individual would have to pay. So hopefully in the years to come, through pressure on insurance companies, that will change. But for now, what I want to do is begin to talk a little bit about insurance. Now, basically, there are two types of life insurance: term and the rest. The key is understanding what the differences are between term and the rest of the insurance types. So let's start with term. A term life insurance policy is like a smart car. No bells, no whistles, just wheels, an engine, get you from point A to point B, and very economical. Well, a term life insurance policy provides coverage for a set, designated, predetermined period of time that you choose. It could be 1 year, 5 years, 10 years, 20 years, or even 30 years. That's what a term life insurance policy will provide, the type of coverage. Now, because it has minimal bells and whistles, and we're going to talk about some of the bells and whistles in a minute, the cost is lower for those who are able to pass the underwriting requirements. So, of course, if it's minimal cost, then that's a savings, or you have the ability to get more insurance. Now let's talk about the rest. The rest are usually referred to by different names, and usually they include a bell or a whistle. Now, what are some of the names? You may hear pre-need, final expense, universal life, adjustable life, variable life, and whole life. These are some of the names that you may hear. Probably whole life is something that most people are familiar with. Whole life. Now, one of the questions I'm often asked is, why is there such a cost difference between any plan that I get? Well, really there are several factors, but let's boil it down to one: your age, your health, and your gender. And not all insurance companies even use gender as a factor in evaluating. To the bells and whistles or riders that they're referred to and features of the policy, they're added to the base policy. And three, of course, company admin and cost and fees. So those are the three basic reasons why there's a cost difference in any policy. Now, what are some of the policy features and riders? Well, cash value accumulation is one of the policies features. And what it does is, over and above what the premium cost, what the cost of insurance is, any monies over that accumulates at a designated value that the company determines. So that's cash value. It does accumulate over time. Dividends. Dividends are payments made to individual policyholders, owners, because the company's really doing well. So that's one of the other policy features. Cash value loan options. Well, remember when I spoke about creating and building cash value? Well, you are able to borrow against that on some policies. And in some cases, policies offer as a feature the cost of insurance only payments. That means you only have to pay the cost of insurance on a month-to-month basis. So that's some of the policy features. Some of the riders include Waiver Premium, and Waiver Premium is a rider that let's say there's a situation where you are not able to make the premium because you fell, you were in an accident, then the Waiver Premium would actually kick in to continue your policy premium payments, which is a good thing. There are also what's called the child rider, and you can insure one, in some cases up to 10 children, grandchildren for one, as part of your plan for one price. And that's a huge benefit for those that have multiple children. Cancer insurance is another rider that can be added to some of the policies. Accelerated death benefit, that helps to provide in the event that you are designated to have 12 months or less, some cases is 6 months or less, where they would accelerate the payment prior to death actually occurring, and it would give you a percentage of the policy. And of course, there are numerous other riders that are available. Now, let's talk about what are the benefits and what's best as far as the term and the rest of insurance. How can we determine what's best for us? Well, first, there's 3 key points. I think if we understand this, that one is, what are your needs? What do you need as far as the amount of coverage? And if you keep it just from a basic standpoint, your needs may be just to ensure that you have burial insurance in place, so that upon untimely death, that at least your burial, celebration of life is covered, all the expenses related to that. So you don't have to pass the hat. The family does not have to pass the hat around. Your wants are over and above that, what you want to leave for your spouse or your family or to an organization. Those are your wants. The key, though, is affordability. What can you afford? And I stress, once you have a policy in place, affordability will help determine you maintaining that policy that's in place. And affordability, that really dovetails right into what are the costs, the monthly premium cost. Now, understand that a lot of times you may hear a unit of insurance. Well, really, a unit of insurance is a term that insurance companies use. It really means one unit is equal to $1,000 of insurance. So if you have 10 units, that would be a $10,000 face value. Now, the cost of insurance is determined, and that is based on per number of units. So in this example that I have the cost of insurance at 10 units at $5 the cost per unit. So it's $50 per month. And I just selected several riders with the cost being $6 per month, administrative fees, which also contribute to the premium of $8 per month, and savings with some of the plans that offer that cash value or savings component around $4 per month. So if you added that up, that monthly premium would be $68 per month. So that just kind of gives you an idea of what the factors are. Now, how to purchase life insurance at reasonable rates. That's one of the questions I'm asked a lot. And one of the best ways is to definitely utilize the group insurance, where no health questions are asked. Employers usually offer that as part of your compensation or benefit package, and usually you don't pay for that. Now, they do offer voluntary life insurance options, where the employer is providing that through arrangement with the company that will allow you to buy additional life insurance where you pay for that for the cost of for the additional life insurance. Nonprofit organizations and associations or affinity groups also offer group policies where underwriting questions are not asked, no health questions. And there are what's called guaranteed issue life insurance companies, which help to provide coverage for those that need it. Now, another question I'm often asked is pre-planning your funeral wise? Absolutely, yes. And why is that? Well, think about family members that have to decide what color suit or dress, shoes, tie, type of casket, flowers, no flowers, all of the details that go into a funeral or celebration of life, even a memorial service, can be very taxing and stressful to a family. So pre-planning that means detailing the specifics of the type of celebration of life that you would like to have. As much as you are able to provide the detail is wise. Now, is prepaying for your funeral wise? No, there are better options available than prepaying. And when I'm referring to prepaying, that's one arrangement that funeral homes have in the past made available for individuals, that over time you can prepay for your funeral on an installment or monthly basis. And there are better options available in not prepaying, but guaranteeing that your funeral celebration of life will be covered, that the resources will be there, that your family will not have to pass the hat around. Now, there are a few companies that will, in fact, insure individuals living with HIV. American Bankers Life, AIG, Gerber Life Insurance, Great Western, and Sons of Italy are a few of those companies. I want to say the main purpose and use of life insurance, as I mentioned earlier, is to pay your final expenses, any debts, financial obligations, the cost of the memorial, celebration of life, cremation, or whatever funeral costs there are. Life insurance will be able to provide guaranteed coverage for those needs. And I encourage, from an insurance wellness standpoint, that's really peace of mind. You'll have peace of mind knowing that that's taken care of. Again, I want to thank those of you that have listened and participated in the insurance wellness presentation. My name is Rudy Ellis, and again, I want to thank the organization for inviting me and to speak. I again appreciate them immensely and look forward to future opportunities to offer more detailed insight on any of the topics that I scratched at today. Thank you. May you continue to be blessed with peace, power, and prosperity, you and your family now and in the years to come.
That's great. Thank you, Rudy. May I call you Rudy?
Absolutely.
Thank you. So I have some questions. One, so I bought a term insurance policy. Let me see. Let me move this. Yeah. Oh, sorry about that. I bought a term insurance policy, a five-year term insurance policy, purchased 15 years ago. The premium increased a tiny bit, but the policy was never canceled. What should this individual do?
Well, in that case, because the underwriting, they've already been approved, it's good to maintain the policy. That policy after the 5-year period would provide with an option for them to continue the policy in some fashion, and they may even allow them to convert it. So it's just exploring, what are the options, and the different companies offer different options after that 5-year period. So that's they're underscoring the whole point, though. The sooner you at least get some coverage, have a policy in place, you may not be able to, $1 million, $100,000, $10,000, get what you can afford and have that maintained. And then over time, you can make whatever adjustments that's necessary.
Right. So when you say convert that policy, what would the options be for converting that policy?
The option would be continuing it for another 5 years, or converting it to a different type of policy that the insurance company may offer. Now, depending on the company, in that conversion process, they may ask for evidence of insurability. So that means there's going to be some level of underwriting of the policy. So that is one of the disadvantages of a term policy, because if the requirement for conversion is that you have to provide evidence of insurability, and if that company does not provide coverage for anyone with HIV, even if it's been 15 years, since that initial purchase, or since, if there's been any period of time that has any period of time from when they actually purchased it, then the individual may be in a situation.
Right.
So,
right. So when you early on in your presentation, you mentioned certain policies where health information is not requested.
Right.
So can you explain what would happen if I applied for one of those policies and they didn't ask me information about health related information, and I got the insurance policy, and let's say down the line, passed away because of an HIV related complication. What would happen?
Well,
Would the insurance company pay out on that claim? Or would it be considered fraud that I do have HIV and I didn't state that?
if there's no health questions asked, and that's one of the benefits of a group policy. If there's no health questions asked, you secure the policy, and if death were to occur, then yes, there would be payout.
Even if it was within like a year or
Yeah, if there's no questions, no health questions, then there isn't a lot of times people think that if I say no, I'm in perfect health, and then yes, there is death does occur, that I'm covered. Well, no, you would not be, because the insurance companies, particularly today, they can really determine what actually the cause was, and that's when a claim could be denied. But in a group policy where there's no health questions, death occurs, it doesn't matter why. They can't discriminate in that regard. Now, one of the things that I didn't go into was that, yes, with the group policy, though, if you are no longer employed you're no longer employed, you don't have that group coverage, then again, there's options that may be available where you can convert it. It may be costly, and that's back to the affordability, but having a continuous policy in place may be better than having zero coverage.
zero coverage.
So and that's where just really the particulars of everyone's situation it really needs to be evaluated. At a minimum, just kind of review what the options are. But part of the presentation is that even if you are diagnosed with HIV, you can get insurance, be it through the group, as I mentioned, and through some of the other companies. And that's the key to secure coverage sooner than later.
Right.
And the sooner is better.
So tell me with regards to being rated, I'm thinking of smoking. My community, the LGBT community, many people with HIV, we either smoke or we
Right.
have smoked. And I'm talking about smoking tobacco.
Right.
So if I am a smoker or have smoked, how will that be reflected in my premium on top of the fact that I have HIV?
Well, some companies will add that on. That's just another factor. If you're a non-smoker or a smoker, so that would increase the premium for the most part. There are some of the companies where that's not necessarily an issue from the standpoint of their evaluation under a guaranteed issue situation. So the smoker or non-smoker may not be a factor, but if it is, they're just going to add that additional cost to the premium.
So when is a smoker considered a non-smoker?
And that can vary from company to company, but the question is, in some cases, can be 12 months. Have you smoked within the last 12-month period? And so if you answer no, then great. So if it's beyond that period, some may be a little more stringent. And that really relates to the different companies, their rationalization for discriminating, really in discriminating who they, really want to insure,
Right.
and some are more liberal than others. So,
So just shop your company.
right.
Shop
So,
your company.
and I always recommend at a minimum, if you're working with an agent that is representing multiple companies in general, that just gives greater options, because part of the evaluation process is going to help determine, a better policy. I never say what's the best. It's a better policy in evaluating the factors, even though the cost, there's always going to be a cost difference. There's never an apples to apples comparison. And that's probably the hardest thing in conveying to individuals, HIV or no HIV, is why does policies cost more?
So one last question.
Mhm.
If you purchased a policy and you were not HIV positive, and then
Mhm.
subsequently you become HIV positive, how would that impact if you then down the line succumbed from an issue that was HIV related?
It's a non-issue.
It's a non-issue.
It's just like you develop prostate cancer, and you had a policy 20 years ago, and then now, it's whatever, regardless. Once you get past the 2-year period is really the time period for the policies where you would receive 100% face value. So that's a window that even insurance companies have as a way to ensure, in case there was something in error, I always say, on answering one of the questions. So the insurance companies, if it was an error in answering one of the questions, then they will evaluate that, and then that's where just determining what the level or the nature of the question that was answered really would determine payout. But if you had the policy past the 2-year period, whatever reason was, death occurred, payout would be.
Great. Well, Rudy, thank you so much. This has been so informative. It was a great presentation. Thank you very much.